It's Thursday morning here in Lagos, Nigeria. Good morning and welcome to Business Morning. It's 10 a.m. and it's time to do business. Relevant and current business conversations is what we have for you here on Channels Television. I'm Ini John Mekwa, and today we're starting not in our usual way. We're starting right here in Nigeria with the Standards Organization of Nigeria. They've been worried about the issue of fake roofing sheets and other construction materials, as we've heard news of collapsed building in Nigeria. So they have this meeting with some stakeholders, those who are involved in the selling and some people who were buying, and they gave out some hints on what consumers should look out for. For instance, they're asking that if a product does not have the Standards Organization of Nigeria's symbol, that product most likely is fake, and so you should not buy that.
We know that aluminum roofing sheets and paints are two sectors or two materials that are always subjected to the vagaries of nature. The elements, rain, rainstorm, sun, SUN, all these affect both zinc and paints. If you live to sell a standard gauge and go ahead to import what they use in the bakery industry to make pans, and you sell it as roofing sheet, that is below standard.
The organization is calling on stakeholders in the aluminum roofing sheets and paint sectors to please adhere strictly to standard quality parameters during production. The compliance to the requirements of this standard is what will give you certification. The objective is actually to encourage excellent quality products and healthy competition among stakeholders. I want to advise the leadership of these sectors to show leadership commitment, analyze both factory and market samples, create consumer awareness, and engage in regular trainings and voluntary competition to ensure quality. We expect a good operating environment that will engender best practices, as this will be a morale booster for people working for you. To the consumers, do not buy any market product without the MANCAP logo. That logo, as I said earlier, is a certification logo. It is a logo of quality. It does not matter where it comes from. It is a sign that the product has not been certified if it does not have the MANCAP logo.
And still in Nigeria, utilizing patient capital has become the preferred solution for global development bodies, national government, and local authorities to address gaps in financing development. It's for this reason that stakeholders like the Pension Fund Operators Association of Nigeria and the FSD of Africa put together a meeting with the theme Mobilizing Patient Capital for Sustainable Development to assess cutting-edge financing structures. The meeting was held in Lagos, southwest Nigeria. The opportunities in Nigeria's challenges, which are not just economical, is the reason for this meeting, organized by the Pension Fund Operators Association of Nigeria, PENOP. Participants are mostly drawn from the financial sector, but they also from other sectors as well as foreign government.
Desertification, flooding, and also terrorism.
The Chief Executive Officer of PENOP, Mr. Uche Aguda, outlines the plan for the meeting.
And these all points to growing problems that we all have to deal with at some point or the other. So it might not affect us directly, but it's only a matter of time before it gets to us. Whether it's with the number of unemployed people banging on our doors, sending messages to our phones, lack of access to quality healthcare or education, or dealing with potential flooding, or the housing deficits that we have on the back of every crisis holds significant opportunities. And I believe that that is where we are as a country. The challenges are huge, but so are the opportunities. What we need to do is to begin to look at the challenges in a different way and use the capital that we manage in a more innovative way.
For the British government, raising funds by reducing environmental losses through proper climate change activities hold huge potential for not just Nigeria, but Africa.
The British government is committed to supporting Nigeria's financial sector, especially the capital market, to become more innovative, sustainable, resilient, as we face emerging challenges such as climate change, biodiversity loss.
We can estimate the financial sector in Africa is producing perhaps $1 billion of the current 30 billion that is at work on climate action, which is an incredibly small number. And as we know, the 30 billion overall is about a tenth of what the continent says it needs in order to drive climate action.
Monies to be made, jobs to be created, but it all begins with taking action. This is the next step for this meeting. Well, taking action is what the meeting should do next. But what we are doing next is looking at the commodities segment, especially after the MPC. Last time we had Dr. Adesola Simoni joining us from Reading in the United Kingdom. It was pre-MPC decision, and now it's afterwards. So let's see if this met his forecast. Dr. Adesola, thank you for your time. Good morning. So the 0.25 basis points increase in the interest rate is within what the FDC was expecting.
Indeed. So if you look at the voting within the committee, as well as the sample of economists, there was a diversity of opinions, right? We forecast 50 basis points increase. Some people forecast 25 basis points. Some said they were going to hold. If you look at the voting, for example, out of 11 members of the committee, 6 voted for an increase in benchmark interest rates. Of those 6, 4 chose a 25 basis points increase, and 2 chose a 50 basis points increase. So you can see the diversity, and the other 5 chose to hold. So we were still in line with, we forecasted an increase. Maybe we were a little more aggressive, and the central bank was more conservative. But if you look at the balance of arguments, balancing both, the need to address inflation, which is at, I think, an 18-year high at 22.8%, as well as still allowing room for growth, I think increasing by 25 basis points, I think it was a good option to go with.
So now MPR at 18.75%. What can we expect? How does it affect us?
Interesting question, Amy. So in addition to increasing the benchmark interest rate by 25 basis points, another interesting, important policy was to narrow the interest rate corridor to 100 basis points to minus 300 basis points, which simply, which simply means that other rates in the market would move towards the monetary policy rates of 18.75%. And we've already seen that. If you look at the auction, the National Nigerian Treasury Bills auction held yesterday, you see that the stock rates across different tenures of instruments increased by an average of 462 basis points to 8.72%, compared to 4.1% at the last auction in mid of July. The biggest increase came from the longer tenure instrument, which was the 365-day Treasury bill, which increased by 620 basis points from 5.94 to 12.15%. So essentially, this is kind of we are going to see some more repricing of short-term instruments in the market. We're going to see the rates, the interest rates, or the rates for these short-term bills trend upwards towards the MPR. I think that is positive. It's also kind of narrowing the negative return between inflation rate and the interest rate. I mean, obviously, comparing 12% to 22%, there's still a 10 percentage points gap, but it is better than what it was before. In addition to that, we're also seeing the central bank use different measures to kind of reduce system liquidity. On Tuesday, remember, I told you that we saw a sharp increase in money supply. Money supply increased by, I think, around 14% month on month, and around like 32% year on year. And if you look at the absolute number, it came in around 9 trillion naira more, bringing the total broad money supply to around 65 trillion in June. Also, if you look at the liquidity within the banking system for the month of June, it's averaged around 500 billion naira. So you can see there's so much liquidity in the system, and that was also contributing to inflation. So we are seeing the central bank use other measures, to kind of drain the system of liquidity. For example, we are seeing also the central bank trying to now enforce the loan to deposit ratio of around 65%. Which means that for every 100 naira that the banks receive, for example, they can only loan about 65 bucks out of in loans. So that is essentially trying to reduce the system liquidity and also contribute towards reducing the pressure on demand pressure on inflation as well as on the FX markets.
Yeah, so I guess that increase in money in supply is actually what made a lot of people disappointed, because we saw a reduction in the CRR of merchant banks. A lot of people were expecting that there'll be a reduction in the CRR of deposit money banks too.
I mean, in reducing the CRR for merchant banks, though it's expected to have positive effect on the real economy, meaning that these merchant banks can lend more to the real economy. The effect in terms of increasing money supply, in terms of system liquidity, is muted compared to in reducing the CRR for commercial banks. That will essentially mean that would increase system liquidity quite significantly, and it would be a risk factor for inflation.
So how does all of this affect commodity prices at this time?
The effect on commodity prices is indirect, and at the moment it is muted because it's indirect. It will come in terms of, again, money to the households and businesses, as well as pressure on the FX. So it's increasing, it's kind of tightening. We expect less demand, less money in circulation, and also less pressure on the FX. If you look at also the FX market, we are seeing some correction, some demand correction because of the high exchange rates. I think as at yesterday, the exchange rates kind of appreciated due to demand correction. Another factor that I did not mention was part of the aim of increasing benchmark interest rates as well as narrowing the corridor is to try to attract foreign portfolio investment into the economy, because at this moment we really need supply for FX. The demand is huge. We also have some unmet demand, pent up demand that has not been satisfied. So there's a lot of pressure on the demand side. But what we need now is to increase the supply, and that is why the central bank is trying to increase the rates on treasury bills as well as reduce system liquidity, so as to reduce the demand pressure on FX as well as to attract foreign portfolio investments into the economy.
Just before we let you go, the issue of FX demand, does it have seasons? I know there are seasons for school fees, especially for parents who have children schooling abroad. So perhaps the government can target those seasons and bring up the intervention, as the CBN, at those periods to help cool, the demand.
Indeed, it is seasonal, but that is just in addition, right? We still have manufacturing, for example. A lot of our manufacturing inputs are still imported from abroad, and that means that perpetually we have huge demand for FX, at least coming from the manufacturing sector. Then the demand for instance, holiday school fee season, which is coming next month for schools, many schools in North America, and in September for schools in Europe. So in addition to that, I think also what we need to note is that the central bank is intervening, although at a little rate. Perhaps when there's much more demand on the FX market, we'll see some more intervention by the central bank. But there's perpetual pressure on the demand side at the FX market because of like I mentioned before, demand from manufacturing to import raw materials for production.
All right, thank you so much, Dr. Adesola Sumoni, Senior Analyst with Financial Derivatives Company, for those perspectives you shared with us this morning.
Thank you for having me.
Let's take a break now. When we come back, the POS operators have been in the news, not on the good side for some time now. Let's see the update from that POS charges hike, which we started the conversation here about a month ago. Welcome back, discussing the POS charges proposed hike or just hike. Well, we've heard, I think the last that we heard of this news is from the president of AMBAN, Mr. Victor Oloja, who's been on this show a couple of times, saying that the association only released the price guide for its members and did not fix prices, and has remained law-abiding over a decade of operation, protecting the rights and interests of mobile money and bank agents across the country. And we know that even at the MPC, the CBN governor, acting governor, beg your pardon, did mention this issue and said, well, they are like a third party. And we saw news that some major go-between would be sanctioned if this is implied. But let's look at another perspective now. Why AMBAN is talking about the rights of mobile money operators. We do have the Executive Vice Chairman and Chief Executive Officer of the Federal Competition and Consumer Protection Commission, that's FCCPC, Mr. Babatunde Rukera, now to speak for the consumers' rights, obviously. That's what they stand for. Joins us from our Abuja studio. Mr. Rukera, good morning. Thank you for your time this morning.
Good morning. Thanks for inviting.
Great. So where are we now? We've seen Mr. Oloja, the president of AMBAN, saying, well, they have no fixed price. We've seen write-ups or statements from the federal government and other associations saying they have no right to increase their charges, but they're saying at least they're self-regulatory. We all know what's going on in the country at this time. Even a loaf of bread is not what it used to cost. So where are you, FCCPC, in holding the rights of the consumers? And of course, remembering that these people are also Nigerians, that's the operators, and they also have their rights to be protected also.
Thank you. Good question. I think where we are is that the system has worked. The position that the FCCPC has taken is not to fix price or regulate price. The law has provisions with respect to determining price if there is a situation where the government needs to get involved in regulating price. And that's not what is happening here. But primarily, the best price for anything is a price that is negotiated in a free market. And a free market means that consumers are competing to buy from a seller and sellers are competing to sell to a consumer. And so anything that distorts that potentially makes the price of anything not the fairest possible price. When there's strong competition, it promotes efficiency, innovation, quality, choices, and the fairest price. And any coming together, concerted effort of building consensus, whether it is directly, openly, by conspiracy, or even signaling by an association, or bilaterally, or by a group of competitors to determine a price, is cartel. It is price fixing. There's nothing wrong with an association coming together. There's nothing wrong with them periodically discussing what is best for the industry. There's nothing wrong with them discussing standards, how to improve quality. But one of the things prohibited is a discussion about price between competitors. Globally, it is one of the strongest challenges to fair markets, and it's one of the offenses that global competition authorities take very strongly. And so when we get an announcement where an association says that they've determined what the prices of their services would be, that's obviously a matter of concern. And it was that concern that led us to immediately issue an advisory saying that that would be against the law. And we're careful in the sense that we understand the nature of that business. We understand it's a very important business. It's very important to the entire commercial value chain in Nigeria. It's very important for creating employment. And it's also an important small and medium scale enterprise space. And so what we did, understanding all of that, was to engage first by an advisory. However, it seemed that the response to the advisory was some level of insistence and adamance. And we had to escalate the regulatory action by saying, well, you know, advising, I mean, I believe, if I recollect, one of the operatives of the association specifically said, that's just on the pages of newspaper, and that we can say what we like, they would proceed with what they intend to do. And when you get that kind of insistence and resistance to a law as a regulator, you must find the right tools to manage that process. And so what we did was to escalate the regulatory process and issue a cease and desist order to the association and its members. And again, clearly reiterating that this is the law. You can't violate the law. And it's not something that precludes you from fixing your price. Let everybody fix the price of their services based on their own model. Some people, their business can succeed unless they have a 40% margin. Some people, their businesses can succeed at 20% margin. Depends on your efficiencies. Some people have higher input cost. Some people have their office in Victoria Island. Some people, their only office is just an umbrella outside their home, and they're providing similar services. And they have determined what would be fair to them as a margin. And so they should be able to sell their services at whatever those margins are. And to make sure that members cannot undercut each other, that's why you have associations that can discuss the standards of the service. If we're all going to provide services at a minimum standard, there's a minimum possible cost for that. And so you're not providing an inferior service and charging less to undercut those who provide a superior service. And so that's the position we took, and we escalated and said, we're issuing a cease and desist, and we don't want to be disruptive and interrupt small and medium-scale businesses, but understand that, you know, enforcing the law is not negotiable. We will continue to engage, but we would enforce the law. And I'm glad to say that I think this prudential approach to regulation has actually worked. I mean, because what we see is there seems to be some mutuality now. We are already in some level of communication with the association and actually looking forward to meeting now. And I recognize the point you made that the president has said that what they've issued is a guide. And yes, we did get communication from the association also seeking to explain what the situation is and drawing the attention of the Commission to what their own challenges are and seeking further engagement. I think that that's brilliant, and we would pursue that and engage more. A guide to prices, you know, it's tricky, but not necessarily illegal per se. Fixing prices is illegal per se. But if there is an industry where guidance is required, especially to prevent exploitation or arbitrariness, and so you're having something like a cap, in some circumstances that is understandable. For instance, in the electricity market, while we're trying to address the metering gap, there's an estimated billing process. And now there is an enforceable regulation that says there's going to be a cap to the bills you can send. That's absolutely legitimate and it's not anti-competitive. And so a cap that is a product of work and some empirical analysis and evidence that is not arbitrary by itself may not necessarily violate competition principles. To the extent that that's what this is, we welcome it because it actually protects consumers. If this is what this conversation had been about, I'm sure that there would not be a dispute between the association, its members, and the regulators. At the end of the day, what is most important is that we're serving the same people.
Yeah.
The association and its members want to provide their services to consumers, and we want to protect those
exactly,
consumers.
Mr. Rukara. So I'm sure the people are happy, you know, to hear that at least there's someone speaking for them, because I remember when the Lagos PRO of Amban was in the studio and reeled out those numbers. Even my colleagues here, you know, I mean, everybody was like, how can we do that? But it's good that it's in the process, and it's good that the FCCPC is also recognizing the fact that they have their operational costs and they would need some adjustment. So even as you go, just briefly now, if any consumer has a problem, because I know it's not just about the POS that the FCCPC is concerned about, and they need to reach out to you, what would be the easiest way to lay a complaint and get swift response from the FCCPC?
The best person to complain to typically is somebody who provides the service. It's a systemic failure that makes people look first for the government to complain when they've bought something that they're dissatisfied with. But as far as that goes, while we're trying to scale up that mechanism across the board, complaining to the FCCPC is easiest if you do it online. We have a complaint portal that you can find on our website, but beyond that, there's an app that you can download, including from Play Store. That's an FCCPC app. And you can file your complaint electronically. We would respond. The vast majority of complaints that we resolve are complaints that are filed electronically. We also welcome people who walk into the offices, and then there are telephone numbers that we also receive complaints through. But by far, the electronic complaints they're the most efficient, and they're the ones where people have the most access to. Because if you have a telephone, a smartphone, then you can file your complaint from your telephone.
All right, thank you so much for the work you're doing, Mr. Babatunde Rukere, of course, for the FCCPC, the Executive Vice Chairman and Chief Executive Officer of Federal Competition and Consumer Protection. The people appreciate you, and of course, they want your intervention in, especially the area of electricity. We just don't have the time. We would have delved into that, but today is not the day. I hope we'll invite you for that conversation soon. Thank you so much, and enjoy the rest of your day.
You too, thank you.
All right, I know when Mr. Rukere mentioned the issue of electricity and tariff, a lot of our viewers will sit up, but don't worry, we'll bring that conversation to you in due course, and hopefully we'll get Mr. Rukere to join us on what they are doing on the estimated billings. I remember just a couple of days ago, I think the lawmakers talked about how they are working to punish, you know, discourse for estimated billing. Well, we've had this kind of conversations for a long time. We haven't seen things change in that arena. Maybe this will change it. But another sensitive issue is the issue of taxation. And of course, we've seen that collaboration or attempted collaboration by the FIRS and MATAN. MATAN is Market Traders Association of Nigeria. We did bring you that report here on Business Morning a couple of weeks ago when the FIRS executive chairman was in Lagos to meet with market traders. And they showed those cards and all of that. And a lot of conversation has come out of that. The pros, the cons, the necessity, the not necessity about that action and that drive. But let's have Mr. Emmanuel Onosomi now join us. He's the lead partner at Cardinal Professional Services at Anderson to tell us perhaps some of the pros and cons and if there's a weak point that we should pursue. Good morning, Mr. Onosomi. Thank you so much for your time.
Yeah, good morning, Edie. Thank you for having me.
So I know this issue of taxing the informal sector raises a whole lot of dust. Informal sector is already overtaxed, especially, I mean, I can speak for Lagos. We see, especially the market women, the transporters, public transports guys, we see how they are giving ticket here, ticket for keeping their trays, ticket for stopping here. I mean, we all see those things. And so a lot of people have the opinion that already the informal sector is overtaxed with their little income or revenue that comes to them. So why does the FIRS need to come into this scene again? You know, and of course the FIRS will tell you they're trying to increase their tax net. After all, they have a target of 7.5 trillion naira for the second half of this year. How are they going to do it if they don't do things like this? So you weigh in and tell us the pros, the cons, and perhaps a way to balance it out.
Okay, thank you very much, Ini, and thank you for having me on the show this morning once again. You know, I think it's important to mention that one of the cardinal objectives that the tax authority is trying to achieve with the partnership with Martin is also to find an opportunity to relieve the market traders of the burden of multiple taxation going on within the open market spaces. You know, we agree with me today, you know, several interests are representative in the market collecting one form of taxes or the other from the traders. So one of the objectives that the tax authority, FIRS, has communicated in the MOU alongside the joint tax board is to say they will be collaborating with security agencies to see that the activities of touts and illegal collection agents, you know, operating in the market is stopped the moment the MOE kicks in, you know, and that we give the market people just one avenue of paying tax, which will be the VAT direct initiative. But the big question on the table is whether there is enough political will, you know, to get the tout out of the spaces. You know, and the FIRS needs to understand that while, you know, they are trying to shore up revenue for VAT for the purpose of distribution among the federal, state, and local government, you know, they have some other political interests that are very operative when it comes to collecting daily dues and tariffs from the market operator. Do we have enough political will to stop this? With the security agency as communicated by the tax authority, we were able to put a final stop to multiple taxation for market. If that can be answered, you know, I think that has not been clearly, you know, answered by the FIRS in this MOE. If they can provide an answer to that, I think that would be one of the biggest pros from the initiative.
Obviously, the market traders would appreciate if the FIRS can do that. But as you said, it looks like a very long journey, because you've had this system infused in the tax collection system for a very long time. And that's why somebody would applaud someone like the governor of Abia State, you know, Mr. Alex Oti. Immediately going to office, he closed down all those, you know, leakages, tax collection that were kind of informal, you know, and then after some weeks, I think he was not able to construct or structure a system where he's comfortable with. But I mean, in reality, I know you talked about the political will. How do you think this can be implemented in a state like Lagos, where we know that that informal sector is really receiving punches, you know, from all those tickets and all of that?
Yeah, so even beyond the political will, you know, there is also the aspect of, you know, what type of taxes, you know, to be collected. You know, the state government wants to be careful about the efficiency of META. You know, the data has it today that about 65% of Nigerian economy is contributed from the informal sector. And as of today, when we are computing our GDP figure, you know, we don't put in any figure from the informal sector, largely because, you know, the data are not very reliable. The Nigerian Bureau of Statistics has not been able to get any form of reliable data from the informal sector. So the state government will also be wary to say, if we go the route of Matan, how efficient is the process that the FIRS and Matan want to put in place to ensure that, you know, the 40 million membership of Mertan are disclosing their right amount of revenue, you know, and Mertan loyalty is not first to their membership than to the government. You know, those kind of concerns are there that may then make the state government or the local government to have a different posture as against the posture of the federal government when looking at what the FIRS is trying to achieve. Remember that VAT is just a type of tax. You understand? The VAT is just a type of tax, apart from which is being paid by the consumers of the product, the customers. What about the taxes that these informal sectors are expected to be paying, the personal income taxes that they're expected to be paying to the state government as the form of their own, contribution to development within the economy? So the way the FIRS has communicated is that when the VAT direct initiative comes in, then there will be no any form of tax going on in the market space. I doubt if the state government will be too or completely, aligned with that landing when it comes to tax collection. So in a place like Lagos State government, we've seen how, some of the informal tariffs that are going on in the market have been reported to the state government, maybe not likely as efficient as possible, but we still see room for better collaboration. I think JTB is trying to agree everybody on this. So the question on the table now is that is the state government okay with the fact that the collection of VAT should suffice from open market operations and there will be no other tax that will be collected? But if they are not able to get to that agreement, there will still be some other taxes going on at the state level because of the truth, the state government has the legal room to ask the market to pay their personal income taxes.
I wonder if this is another assignment to Mr. Taiwo Oyedele, who has recently been made the chairman of the Tax Reform Committee. Perhaps he could be a coordinating factor in the midst of all of this, you think?
Yeah, so that is where Mr. Taiwo Oyedele's work is review and recommend. You understand, largely. He will definitely look at the entire, and his team will be looking at the entire landscape and try to see, area of contradictory policies and whether we can align some of this policy. And in addition to this, the state government may also be looking at, the issue of efficiency in separating the type of people and the category of people that should fall in the tax net. Remember that the VAT direct initiative has said market trader that have less than 25 million naira revenue, according to the to the KAMA Act and the VAT Act, are not expected to pay to these taxes. Even the ones that are into the business that are directly exempted for VAT, like basic food items, educational products, medical products, are not expected to pay VAT. So the partnership with Metan, the state government may be wary to say, is Metan able to efficiently, administer this for the purpose of ensuring that the right amount of taxes are collected? So if at all, Mr. Taiwo, the team will be working on this, also for better improving the implementation. Those are some of the areas of little loopholes that needs to be addressed.
All right, thank you so much for your views, Mr. Emmanuel Nosomi, lead partner at Cardinal Professional Services at Anderson.
Thank you very much, Jennifer. Bye.
Great. So let's head to the markets now and see what's happening there. And Anita walks in with the numbers. Not a very good.
Good morning, Ini.
Good morning, Anita.
Yeah, midweek transactions at the exchange at the NGX wasn't what you might say is not impressive, but if you're an investor, you definitely would.
You need to take profits.
Exactly. You put your money where your mouth is. So
sure.
The red picture is not maybe the market's performance. It's actually result of profit taking. So that's it. It's not a sell-off. Expected profit taking.
Yeah.
So now we're going to talk about the fixed income market, but first, in just some few seconds, let's take a look at the equities market, which was down by 0.46%, about almost 0.5% at the close of midweek trading session, and in naira value, that's about 187 billion, which you can see here, but we're still within that 35.7 trillion level, which the market managed to regain. And at the same time, we saw that sectoral performance across the board, it was a kind of a mixed picture. But of course, when you take a look at the bigger picture there, the banking sector had that much impact on the market, as well as MTN Nigeria, which fell by 3.4%, down on its share price. We'll take a look at the consumer goods sector. Also, they're looking at the impact of the MPC's rate hike, the CBN MPC's rate hike, which is, the cost of borrowing, is going to have an effect on some of the consumer goods companies, firms, as well as the industrial goods counter. Take a look at their 0.02% decline on that market. But we saw on the other side, the flip side, the insurance sector, many times when other sectors are on the downside, the insurance sector will be on the upside. Take a look at the board there, 0.02% for that counter. And then the oil and gas, a second day of advance for that market, it was strongly by nearly 5%. For the activity chart, in terms of activity, the market's the total volume, it declined by 9.6%. So to that value, you see there 500.43 million units, and then also red across the board for that market. Let's flip over to the fixed income market, where we saw quiet activity for the treasury bills market. Take a look at your board there. 49 deals carried out at a value of 137.12 billion naira, and the highest concentration was on the 27th of June paper 2024, 18 deals at 34 billion naira. And then for the bonds market, we also had a bearish performance. The average yield there, it advanced by 20 basis points to 12.9%. Now, to give us a bigger perspective for the fixed income market, let's talk to Caleb Alimi, Chief Dealer at Providence Bank, to give us more details about this market. Caleb, thank you for joining us.
Thank you for having me, Anita. Good morning.
Yeah. Now, I have two questions for you, just in some split seconds. First of all, we had the primary markets auction at the market, and then investors within the fixed income market, are they moving into I see the yields are kind of being attractive, and at the same time, a day after Nigeria's Monetary Policy Committee hiked their interest rate, the U.S. Fed also raised their interest rate to a range of 5.2 to 5.5%, the highest in 22 years. So give us the reactions to the markets.
Okay, let's start from the local markets. As we know, MPC has increased, the MPR rate to 18.75, which is also the highest, in a couple of years. And we saw an instant reaction in the Treasury bills primary market auction, where yields on the one-year paper jumped almost by about 600 basis points, from 5.94 at the previous auction to 12.15 at this month, at the recent auction, at the longest paper, which is the one-year paper. We expected that to happen sort of on the back of the fact that, first off, there's been a hike in interest rates, and then second of the fact that the market has not been so liquid. You could see from what you said earlier that the bonds market was a little bearish. So what we are finding is, a bit of switch from the long end of the curve to the short end of the curve, just as market continues to, take into cognizance the fact that we expect higher interest rates, given where inflation is, given the monetary policy actions that the MPC has to take to curb inflation. Going forward into next week and the rest of the month of August, we expect a relatively dry month in terms of liquidity. We may see yields continue to track upwards, especially on the bond space, while in the treasury bill space, yields will hold stable around the maybe 10 to 12% mark.
Okay, so now my second question before I let you go. What impact do you see the U.S. interest rate hike having on Nigeria's financial markets?
Interestingly, the Fed's hiked the interest rate, but I think the forward guidance is probably like the last hike. Market has interpreted that positively. What we have seen is a positive reaction towards Nigerian Euro bonds. There's been a rally, sort of like risk-on sentiment at the global equity space in America, and it's affected, emerging markets asset positively. We've seen a rally in the Nigerian space with yields coming lower for our Euro bonds. Our fundamentals remain strong in terms of oil prices and all of that. So we think that going forward, market has priced in the hike already, and they see the forward guidance as very positive. So we expect, rates to continue to come downwards as far as Euro bonds, which what it means is if Nigeria wants to go to the market today, it will probably get those monies cheaper than it was like a month ago.
Okay, thank you, Caleb. I think we'll leave it there. Quite a very interesting analysis there. Thank you for having that on our program. That was Caleb Alimi, Pleasure. That was Caleb Alimi, fixed income dealer and chief dealer at Providence Bank. So for the Naira, it firmed, right here we have it at the Naira firmed to about, it firmed by more than 6.9% to about 740, and that's the best since June the 15th. And then, of course, the welcome relief because it represents a significant jump from 791 Naira to Kobo against the dollar, where market traders there they're kind of impressed with it.
Yeah, impressed with it, but we hope it stays because we know what the market needs when it comes to FX is supply. There's need for supply. But thank you so much, Anete, for giving us all that. Now let's head to London, where Juliana is standing by. Juliana, good morning. So while we're talking about cost of living crisis, we see that energy suppliers are smiling to the bank. Their half-year profit was, I mean, can you beat it? It's that's a whole lot of money there, £969 million for the first half of the year. Profit. Perhaps there should be a windfall tax for energy suppliers too.
Good morning, Innie. You're absolutely right. We're bang in the middle of a trading update season, and we have had a slew of updates this morning for energy. You were referring to British Gas, which is the undercompany of Centrica, which is Britain's biggest energy firm. They have reported pretty extraordinary profits, and as to be expected, there has been a huge outcry from campaigners here in the UK, because believe it or not, even though we have seen oil and gas prices drop significantly from the start of the Ukraine war last year, energy firms are still making a lot of money from people here in the UK. Now, there has been a response from Ofgem, which is the energy regulator. They have said that, you know, there's nothing to see here. People should calm down, that this kind of £969 million profit for British Gas is an outlier, and it's only that way because of the energy price cap. Now, the British government had to increase the energy price cap because we had dozens of smaller energy firms collapsing. They couldn't afford the wholesale gas price. And so we had to increase our energy bills. And there is the issue for the update for them. Separately, which is the biggest update of today, is Shell. They have actually seen a drop in their profits. Their profits for the 3 months to the end of June have come in at about $3 billion. Now, of course, that is a lot of money for just 3 months for the second quarter. But if you look at what they were reporting this time last year, I believe it was about $11 billion, and we were calling that an extraordinary profit take. And even in the first quarter of this year, they were up by about $9 billion. So certainly the tectonic plates are changing. I think now as well that, you know, oil and gas trading updates are not just business stories. This is a geopolitical story. But in the case of British Gas, the regulators and Number 10 are saying this is just a one-off profit margin, that they will be going back down to regular profits in the next trading update.
All right, so let's let them breathe for a bit. But we've been hearing a lot of stories about weather in Europe, Greece, you know, tourists are paying a whole lot for it, a lot of people even losing their lives. How is this affecting the UK?
Yeah, you're absolutely right. Southern Europe at the moment is going through some really horrific times. Some of the scenes that we've been seeing are pretty much apocalyptic. And I think you only have to cast your mind back to this time last year. Britain was actually going through the same thing. I think at one point we reached the hottest temperature ever, which was over 40 degrees Celsius. And this morning, the Met Office have released a report looking at weather in the UK and what it's likely to be within the next 100 years. And what they're warning is that we are going to see persistent hot weather, even during much colder seasons. I believe last year, of course, was the hottest year on record. I don't know if you can see behind me, Innie, but it's actually not that hot today. We're in summer. And I think for most people, if you think of Britain, the typical climate here is wet and rainy, and it's quite muggy this morning. And we haven't seen any wildfires as of yet. But there are suggestions that perhaps we could be seeing that in future months to come. So yeah, pretty shocking scenes we've seen in Southern Europe. They're not here in the UK yet, but the climate experts are saying that we should expect that in years to come.
Wow. All right. Thank you so much, Juliana, for that. We'll talk to you at 1:30.
Thank you. Talk to you.
All right. And talking about extreme weather, the crypto market has been waiting for the weather and the Federal Reserve, and they had that yesterday, right. But still it's unmoved, unchanged. Neutral. It's still neutral.
I don't know how you like your shoe polish, but Some like it neutral, so they can use it for any
I like it
color.
clean and shiny.
Right.
Yeah.
So neutral it is this time. No red, no green.
Okay.
So that's what the market is giving us right now. Let's look at the top cryptocurrencies we track. Now we see Bitcoin there, still below that 30,000 level, 0.80%. We've seen a bounce this morning. Some are saying it's maybe the bounce that leads to a level that breaks that 30K resistance level at this time. We'll see if that happens. Ethereum, $1,875, up 1.24%. Bigger move than Bitcoin. BNB, that's holding up there, 1.75%. The native coin for the Binance Exchange, also trying to get a bounce there. Cardano, the biggest mover, up 3%, 31 cents, losing and breaking above that 20 cent level this morning. XRP holding up 71 cents, 1.81%. And we see XLM still following XRP behind closely at this point. Let's bring in Gilbert Rupata now, financial market analyst. Hello, Gilbert. Good morning.
Yeah, good morning, Mr. Ladi.
Yeah, so the almighty U.S. Fed meeting, everyone was looking forward to that. We had it yesterday, 25 basis points as expected. But tell me more about the forward guidance given by the U.S. Fed chair.
Okay, yesterday's decision by the Fed to increase rate to 25 basis points actually brought us to a range of 5.2% and 5.5%. And while this is the 11th conservative rate hike since March 2022, it also brought the federal fund rates to its highest level since in about 22 years. And the good news is that we are no longer expecting a recession, but rather a soft landing of the economy. However, the Fed's commitment to bring down inflation to 2% was still reiterated, with the odds of another rate hike by September. But Mr. Ladi, doesn't it surprise you that interest rate decision no longer brings the kind of volatility we have always seen before in the market?
Quite incredible.
Which I think this is because the market can predict or anticipate the Fed next course of action in the economy. Typically, it's just priced in. But we are still experiencing more of a slow market correction and a slight easing in prices, which I actually regard as a good thing because it's going to form a good support and a structure for the next surge in the price of Bitcoin and other major crypto assets.
Gilbert, it almost seems like investors are just, looking out for what the Fed chair is going to say for the upcoming, meeting and, direction, getting some kind of direction. It's not really most of the time about the hike exactly, but what he says, going forward.
Yes.
So he's saying there's going to be some kind of soft landing for that economy. How bullish is that, going into the second half of 2023?
I really regard this as a bullish news and words from the Fed's chair, because this means there's going to be available money in the economy for institutions to borrow. Typically, once institutions have more access to lending, we know typically where they always take the money to. It comes back into the marketplace, and we could see major institutions filing for ETF. Other institutions are also coming into the market as VC or having an institutional entry level. So there'll be access to money, and there'll be access to lending from this institution to come back into the marketplace. So this isn't just bullish because there'll be fresh money coming into the marketplace. Sentiment as well will turn bullish from retail investors and institutional investors alike.
All right, hopefully we'll win that battle against inflation in this 2023. Thank you so much, Gilbert Rupata, financial market analyst.
Yeah, thanks for having me.
All right, now if you look at the top gainers now, we'll see TON there, Telegram coin there, 3.42%. It's top on the counter, $1.36. And we'll see Theta there, and Doge, that's the king of the meme coins, 3.15%. I'm sure Elon Musk does have something to do with that. DYDX, decentralized exchange, that's up 0.37%. Let's look at the top losers this morning. XDC is top on that counter, 6.89%. We'll also see Pepe on that counter. So yeah, that's how the market is looking today. It's still neutral, and we see the meme coins there trying to get some attention in the market at this time.
Yeah, everybody deserves attention every once in a while.
Exactly. So that's how it's looking.
All right, thank you so much, Ladi. See you at 1:30. So that's it on the program today. Thank you so much for being a part of it. Ladi will be here at 1:30. Update from the world of business. That'll be Business Incorporated. And tomorrow, Ladi will be here. So goodbye and take care of yourselves. I'm John Mekwa.